So how can we call this tape rating? Well, in that yellow shaded area, okay, if you're looking at the candles, you're seeing prices just trade sideways, candle after candle in a sideways trading pattern. If you're not looking at candles and just watching price, are prices changing much, or are they basically staying the same? They're basically staying the same, right? Okay. Now all of a sudden, when this red candle starts forming and then forms, what happens on the tape? On the chart, you get a big red candle. On the tape, prices drop. Okay. Once I see that prices are trading in the same area for a while, and then there's a strong move away from that area, I know that supply and demand are out of balance at the origin of that move. I can do that by watching the tape. I can do that by watching a chart. Okay, a chart is just a colorful representation of the tape. Does everybody understand that? Does that make sense? Whoever asked that question. Okay, this is just pure tape reading, nothing else. All right. So let's see here. So the All-Star entry. Back to the All-Star entry. What the All-Star entry is, it's simply combining fresh, and keyword there, fresh, supply and demand levels, in other words, market turning points, with Bollinger Bands. So all we're adding to this is, instead of just using the whole supply-demand concept, we can also add Bollinger Bands to this. So, if prices rally up to this level and are piercing above the upper Bollinger Band, it just makes it a little higher probability entry. Does that make sense? Okay. All right. Yeah, Rob, that or the price of the candles. Yeah, sidebar is the price of the candles. Okay. It's all the same thing. All right. Let's see here. So again, if prices come up to this level, and let's map this out. Let's put some numbers behind this. So let's say if prices get up to 99.68, and we look at maybe a 30-minute chart here, or if we're going with a 240, I'll go with something, a closer time frame. Let's go with a 60-minute chart. Okay. So if prices get up to that level, let me just put them next to each other. Okay. There we go. So let me re-grab the chart. So if prices on the 240-minute chart get up to that supply level and they're piercing the upper band on the hourly chart, just makes it a higher probability trade, right? 99.68 on the entry, and then we'll go just less than about a handful of ticks or less above the level for a stop. Okay. All right. So again, do you need the Bollinger Bands? No, but it just makes it a little higher probability entry. Okay. Now the targets for the All-Star entry are pretty simple. Most people will use the midline of the Bollinger Band as the first target, and then the lower band as the second target. Okay. And as long as the level that you're trading at, in other words, if you're shorting at a fresh supply level or buying at a fresh demand level, as long as the level is fresh, meaning it's the first time prices are back into the level, your winning percentage should be pretty high. Okay. Now, often these are not going to produce with that entry and those two targets. It's you're not often going to get big risk reward opportunities. You're not often going to get 5, 10 to 1 opportunities. So another exit that you can add to this, a lot of people do this in the trading room, is you can make this one of the exits an opposing demand level, which is typically going to be lower than that opposing Bollinger Band. Okay. Yeah, you want prices to be really outside of that Bollinger Band and into a fresh level. Okay. You could just go with standard Bollinger Band settings for this. Now, full disclosure here, just so you know, I don't use this. I don't use the Bollinger Bands, but I do see a lot of people using them in the trading room, combining them with the levels, and they seem to really like it, do well with it. Okay. Okay. Etham, again, the candles are the tape, right? Okay. The candles is just a colorful form of the tape. All right. So one of the most important things, yeah, so someone's asking about fresh, right? Okay. That's the important thing. Make sure it's a fresh level. So here's what determines whether you have a fresh level or not. And this goes along with today's lesson or any lesson for that matter that we do here. The only way that I would call this area a fresh level, the one the Canadian dollar supply level here. Okay. And for those that are new with us, this whole supply demand concept is foreign to you. We have a lot of recorded sessions where you can pick this up. There's a ton. If you're new to this, there's a ton of information you're missing with regard to the whole supply demand concept. Okay. Yeah. So Heatham. So here you go. So again, prices are trading sideways here. Then we let prices move away from the level. Now, what you want to do to make sure your winning percentage is big and your profit margins are big, are make sure that you don't even call this a level until prices move away from this level at least twice the distance of the level. I'm going to repeat that because it's so important. This does not become a supply level until prices move at least 2 times, the distance away of the size of the level. So if let's call this supply level 2 points. Let's just for simplicity's sake, let's call it 2 points wide from top to bottom. This thing needs to move away for at least 4 points. Okay, and then and only then does it actually even become a level. Okay.